of love. So I think we're live now. Let's go live with all the love. Emma, you can keep your camera on as well. And we may need you here for more technical help. So thank you so much to Adriana and Dr. Koshiyama and Dr. Kazim for inviting us here today to UCL's first Algo 2020 conference. It's a huge pleasure and a huge privilege to be invited to lead a discussion on artificial intelligence in financial services here at the leading edge of research, innovation, and where industry, technology, academia, and the greater good of society all need to drive forwards these fantastically powerful technologies. So thank you so much, gentlemen, for inviting me. And thank you so much to our audience. I see we're up to 37 participants now, loads of whom are friends of mine. So thank you to everyone I know who's dialed into here, my friends from the ICA, my friends from TSB, my friends from other fintech CEOs such as Jonathan Corner. So we've got a incredible panel here with us today. I'm going to very briefly introduce my co-host, Terence, and then we're going to move on to our three groundbreaking, world-leading AI technology entrepreneurs to tell us about the work they're doing. To introduce myself just very briefly, I'm a very ordinary person among this gallery of stars. I've worked in banking, commercial and investment banking most of my career, in risk and technology. I've recently completed a master's degree in artificial intelligence and published some research on the management of risk in AI. And I'm here today representing myself and my research, not on behalf of any organization. So my views are all my own. I'm really fantastically lucky. We're all very fantastically lucky to be joined by all of these stars, but Terence is a global thought leader. When he's not doing panels with me, which is obviously one of my favorite pastimes, he can be found on television in Japan, in China. He can be found advising world government leaders, the IMF. He can be found writing in the FT and Harvard Business Review, or founding one of his many successful serial entrepreneurial ventures. So fantastically thrilled and overjoyed to have Terence join us here today. And together we're going to co-host and introduce our panelists and our topic for today, which will be to look at challenges and opportunities in artificial intelligence in financial services. Terence.
Thank you very, very much, Janet. It's, you know, like it's like I feel so little because like I'm just like with all these, like you're saying, galleries of superstars. So I don't want to hold up because like I don't have anything to say, but other than saying thank you very, very much to everyone who is joining us today. So why don't we get the show going?
Let's get the show going. Let's get the show going.
Yeah.
So we're going to start with each of our three frontier world leading entrepreneurs introducing themselves, their AI, what is so special and what is so world leading about the technology that they produce. Maybe about 5 minutes each, and also introduce yourselves as well. So I don't know, does anybody have a preference who'd like to go first? We didn't agree on order. Hands up, who wants to go first?
Don't mind, I'll go.
Jane, okay. So Jane has been described as the voice of global fintech. So anybody who's watching, you have got the authority here. She has a deep expertise across internet payments, mobile payments, cards, legal and has played legal and commercial roles, and is a well-known keynote speaker at anti-money laundering events and on the whole topic of anti-money laundering and technology for AML. She's CEO of Kompli-Global. Over to you, Jane. Thank you so much for joining us today.
Thank you very much for that introduction. Emery, can I share? Can you enable me to share my screen? I've got some slides I'd just like to show, if that's possible. I suspect I might be able to, so okay. I am the host now, and so I should be able to share some slides. Bear with me 2 seconds, because they are, I did have them open. I did have my PowerPoint open, and I should be able to find it. Just bear with me 2 seconds, please. Yeah.
Oh
yeah, now I've got
done.
to the,
You got
yeah. Hooray, I've got
sharing.
it. Yeah, I am, and I'll just put that on the full screen. So yeah, let me just do that.
It's all good now.
Yeah, that let me just go back to the beginning. Sorry, I'm just going to flick through. I'm going to sort of go back, if I can, to the beginning. Just hold on 2 seconds. I'm going to stop that screen share and see if I can find the beginning of my presentation, which I think should be on one of these, but I'm not quite sure why. Ah, yeah, okay, there it is. Sometimes Zoom has a little moment where yeah, it doesn't always work the first time you do this. So I know I can actually, maybe I can, all panelists can now share, because I know that my slides are okay, good. Screen sharing has stopped as the shared window has closed. I don't know why it's doing that. Bear with me again, please. Sorry.
Well, what we'll do is we will have a little chat while you're doing that. And I was watching Ben Gertzel from Singularity Net on Monday night, run a conference, and he commented, he was having trouble with his screen sharing. He commented that it's easier to run a global AI network than it is to screen share on Zoom. So you're in good company, Jane. You're absolutely
I love it.
I love it. And like Jane, you know, like it's not just sometimes it doesn't work. Zoom doesn't work. It's not just sometimes.
Jane, we can see. I can tell you're sharing your screen now, Jane.
Yeah, no, I am sharing my screen now. I'm there. It's okay. Sorry, it was only a matter of time. This is just, I'll just talk over. I really want to only talk over about 4 slides because I know that I've only got 5 minutes. But I think it's a good idea if I explain who I am and what I do. So, yeah, or in fact, Janet's already really explained. I got into compliance relatively late in my career. I've been in compliance for about 7 years. I started life as qualifying as a barrister, and I've worked in payments a long time. I used to teach the International Compliance Association postgraduate course. That was a very interesting thing to do, and really enjoyed that. I do speak at quite a lot of conferences. I'm not a techie at all. So I have some legal expertise. In fact, I was listening to the previous session, which was a lot of very erudite academics talking about AI, and I'm not going to pretend that I could even begin to keep up with the language. So my company, Kompli-Global, essentially provides due diligence services. So if you want to onboard a customer and you're a bank, then you would come to us to enable you to do appropriate checks on somebody before you decide to take them on. There are lots of providers of this service in the field. We are using a combination, as it says here on the slide, of advanced AI-driven technology and human expertise. So we don't only use technology. It's terribly important to emphasize that you can't do everything with technology, but we do fill in the gaps that exist. And I'll talk a bit more in detail about those gaps, because when you're a bank, you're very highly regulated. You don't want to take on somebody who's a criminal. I do have a friend, Dave Birch from Consult Hyperion, who suggested the other day that it was a good idea to take people on who were criminals, because then you could monitor what they were doing and you could catch them. But I don't think that the regulator shares that view. So we have a platform where we have our technology and we have other people's technology on that platform to enable you to safely on board. And apart from the technology, we will also provide a service of a report by an analyst, if that's what you want, because not everybody wants to use the technology, just the technology. They might want to have enhanced due diligence, and they would follow that a little bit more closely and get more detail. So we have a variety of products. I'm going to skip over those because I particularly want to get to this slide, which is just to show that we have a number of different, what we call modules. What's important if you're a bank analyst is that you can pick and choose the order in which you onboard somebody. I know Tunde is going to find this quite interesting because I know he does this in a lot of his businesses. So we don't pretend to provide all the technology ourselves because we are specialists and we do like to stick to our knitting. We know what we can do, and we provide best of breed. We have some best of breed partnerships to provide the other things. So you can see that we have various modules ourselves. One of our main modules is we started life with an adverse information search tool, because when you're onboarding clients, you're supposed to look to see whether they have any adverse information against them. And you're supposed to look for credible and reliable sources of that information. And that's a very important part of the legislation, which is, dare I say this, more honoured in the breach than in the observance by some regulated entities, simply because they find it very difficult and they tend to use the Google or some other tool which isn't necessarily appropriate for trying to uncover that information. So that's an interesting, so you can pick your workflow, and this is what I wanted to just show with this slide. You can choose which modules you look at and which order you do things. So it enables a bank analyst to really have a lot of tools at their fingertips. We've ingested all the Companies House data, which doesn't get checked by the UK Companies House, and we've overlaid it with a lot of risk check factors. So essentially, these slides will be available if anybody wants a copy of them. I just wanted to show you that if you use Google or Bing or one of the conventional search engines, you're really only searching a very surface area of the web. And just to say that's quite often not seen as appropriate, and it isn't necessarily, those commercial search engines weren't designed for due diligence. And I love the quote right at the end, which I'm just going to finish with, which is, if you think compliance is expensive, try non-compliance. Okay, that's enough from me.
And really kind of you to offer some slides to all our viewers afterwards as well. So we'll come back to you to talk about how the use of artificial intelligence enables that the assimilation and management and processing of that giant those giant data sets that you're working with. So thank you so much indeed. Right, who'd like to go next? Suzanne or Tunde?
Your choice, Janet. It's your show.
You spoke. We go with you next, Suzanne. Suzanne, it's absolute total pleasure to meet you. Suzanne and I were introduced via my West African AI and West African Music Festival, which the UCL team and Professor Treleaven very kindly supported and sponsored. And via that, I was lucky enough to get to meet Suzanne. Suzanne's a absolute blast of positive energy in anybody's day, really pushing the frontiers of technology and high frequency research in stock price and asset management and price prediction. Suzanne's a serial entrepreneur, serial automation expert, serial innovator, and founder really of some very, very special techniques, CEO, co-founder and CEO of, do you call it Ainstein AI?
We do.
Ainstein AI.
Thank you, Janet.
Brilliant. I hope I've introduced you okay. Suzanne, tell us about Ainstein. Where are you going and how are you getting there?
Thank you, honey. Janet, we love you too. And I just
Oh,
want to
I
say
love you
we
too.
had a lot
Thank
of
you.
fun on that other event and fabulous music. I'm not sure if we're going to have more fun today, but we're going to try. Okay.
Thank you.
So anyway, continuing, thank you, Jane, too. And continuing on that risk theme, but from a completely different dimension. So thank you for your interest in Ainstein and of course in AI itself. So important. Why do we care, right? Why do we care? AI, in our view, is a new way to win. It's a new power. It's a superpower. And what do we do with that? How do we help people win with AI? So let's take a look. And if we jump to the next slide, the Ainstein technology is creating insights on 40,000 companies and every industry, including new perceptions around safety and risk. And you're going to hear the word risk a lot today, but it's obviously a very important theme and something that AI is very expert at, creating patterns around risk, showing hidden risks. And of course, that's a big focus for us here too. So this is of benefit and interest to not only asset owners, but also the management and the boards leading these global companies, stock exchanges too. So let's start with the question, what changes with Ainstein? And actually quite a bit. So in addition to performance improvements in safety, risk, mastery, and of course, alpha, Ainstein also brings a lifestyle change. by automating work and making work easier. It's a big focus. Now, in the next slide, people find the Ainstein cube fascinating. So let's take a look at the cube here together. Is this the way you see your portfolio today? I don't think so. So soon it can be, as Microsoft sells Ainstein to banks so they can offer the cube to you. Now, notice at a glance, you instantly see what is safe or risky, and you know what action to take. And you can also collaborate with advisor and whatnot, share this forum, you can interact together, and you see the color ribbon at the top. That's the research gateway. All the detail is there. All that work is already done. If something's red, you can drill through and see why. If there's a risk, what is that risk? And notice it's all presented here for us. So next, we're going to show you the portfolio checkup with more guidance and detail. And here we're sorting by the Ainstein rating. And also notice in that portfolio checkup, here we go, that there is the side-by-side integration of ESG for the full picture. If you look over to the right, you'll see ESG metrics from two providers, Arabesque, a world-class firm connected to the UN, George Kell, a giant in the ESG space, as well as MSCI. Now, we're adding these side by side for clarity about not just the financial metrics of a company, but also the behavior characteristics of certain companies and how they compare to their industry, which of course is the focus of ESG itself. Again, another risk measure. Now, let's also look in the next tracker as we can sort the ESG rating as a standalone. And this is the Arabesque rating you see in the wheel. And you can drill through in other detail within that wheel, completely interactive. So it's a lot of work to pull this together without Ainstein. And soon, under the EU mandate, disclosing ESG at the fund level will be required across the space. Again, Ainstein is here to bring clarity and save vast work and time. Our view is that information should not be ignored, but of course it's very difficult to create a full view, let alone to administer and continually update, and that's where Ainstein is of help. Now, Ainstein also provides research on the ETFs with the full detail and interactive. And in the ETF tracker, which is the next slide, you'll see we're first showing a view with all the ETFs. Thousands of ETFs are being tick by tick rated, evaluated, and trying to surface hidden risk, trying to have people understand more deeply where they may be of risk. Again, the ESG is included. And just quickly, one more view of a single ETF the next time, in this case, BlackRock. And again, sorting by fees, performance, whatever characteristics might suit the preferences. Now, one more, we're going to show you navigating earnings season, a well-known challenge across the space for investors and management alike. And here too, automation is the key. This is showing, I think in this view, 2,800 companies, well beyond the S&P 500 or any index. And this tracker is creating these underlying metrics and surfacing the patterns in sync with the live reporting. That's a first, and obviously much easier. So to conclude, and thank you for your interest, if we think about the impact of Ainstein, and just to step back a minute, notice we've all seen a lot of information here, and we've done the work. So that's probably my favorite part. As an analyst who wanted my work automated, I would say we're there, right? But the goal, the real goal, is to empower people, whether they are the C-suite executive teams or the money managers, analysts, compliance people, retail investors. With the Ainstein Guardian Angel and the AI-enabled portfolio tracker in your pocket, life is better. That's where we're going. So in total, Ainstein includes 12 trackers, taking on the heavy lifting so people can add their judgment without the need to directly deal with data or create analytics, as Ainstein does that work for you. So again, thank you for your interest, and we look forward to the conversation. Feel free to reach out to me at StockSmart or obviously the LinkedIn, and I just welcome the friendship and the conversation with all of you. Delighted.
Thank you so much, Suzanne. That was utterly inspiring. And again, I think, Terence, I bet you got loads of questions. Being a financial commentator in the FT frequently, I'm sure you must have loads of questions for Suzanne. So we'll come back to that. And lastly, and absolutely, definitely not leastly, I'm really thrilled to introduce you to Tunde Kehinde. So Tunde has been described as the Jeff Bezos of Africa. He was co-founder and CEO of Jumia Nigeria, which is Africa's first unicorn, co-founder and CEO of Africa Courier Express, and co-founder and CEO of Lidya, which is an SME lender in emerging markets, which he's going to talk to us about today. Tunde, I noted last week, went to the same university as the new Vice President of the United States. I almost said our new Vice President. That's how closely I've been following the following the news. So an alumni of Howard University alongside Kamala Harris, as well as a Harvard MBA graduate, and on a mission to create 100 million jobs around the globe, which hopefully we'll get around to talking about. Tunde, would you please be so kind, introduce to us who you are, what does Lidya do, and you give us a little overview. Thank you.
Thanks so much for the very warm introduction, Janet. Really, and yes, we are very proud of the new Vice President-elect. So she's a bison, and looking forward to the discussion. We are all proud of her. I'm looking forward to the discussion today. I enjoyed Jane and Suzanne, your comments. I look forward to learning from you all today. So yes, as Janet mentioned, so I run a company called Lidya, and we help SMEs access credit in one day. So the whole idea is you apply today, money in your account tomorrow. And if I step back and think about why we launched the business, there are two main things that come to mind. So in my prior experiences, both at Jumia and also with ACE, we helped small businesses first retail goods and services. So we got a pretty strong understanding of margins by sector and how cash moves through a small business. And then with ACE, it's a logistics business that helps small businesses deliver packages, collect cash, and we saw the impact of collateral and also pay on delivery on small businesses. And the one consistent theme that came out was we need more access to capital, because even though we have something that's working, we're struggling to access capital from traditional sources to take our companies to the next level. And then you come across a very interesting challenge, because there are so many SMEs around the world and the SME credit gap is so big. And I think we all have friends and family who run a coffee shop or a small bookstore, and there's such a demand for capital. And I think there's also a big desire to fund SMEs, from whether it's traditional lenders, banks, pension funds, but no one has seemed to be able to close this gap. And a big challenge is the cost of actually serving and analyzing these small businesses, giving the amount of credit they're looking for. So $5,000 is meaningful to a small business, but when you look up doing that small loan amount and you factor in the different things you have to take into consideration, the cost to serve is high. So we founded Lidya because we felt that with so much data available today and so much technology, you can assess a small business, make a credible credit decision, and disburse within one day. And this is a very personal story for me because my parents are entrepreneurs. So I grew up in a house with two parents who both had small businesses, and you can see the impact on their local communities, but also the challenge they go through every single day to support their businesses. So we now are 3.5 years old. We've done about 20,000 loans across almost any sector you can think about. So everything from general retail to healthcare, agriculture, and we've also been able to scale the product across multiple markets. So we started lending in Nigeria, and we launched this year in Poland. We also launched in Czech Republic. And the power of what we do is our ability to acquire the customer, our ability to assess the customer. We are looking at close to 1,000 data points per loan that we disburse, and our ability to recollect. So we're able to recollect through different timelines, either daily, weekly, depending on the comfort of the SME, and also in multiple currency. And all of this could not be done without the power of AI and machine learning, because we've gone from not existing 3.5 years ago to being able to process 5,000 loans, SME loans a month. And this is with a team of 60 people across 5 different countries. And that processing power is going from 5,000 to about 50,000 loans per month in a few months, and most likely to make a step change to 200,000 loans. And if you think about that step change without having to add lots of physical people and also be able to turn on different countries, because our goal is to enter 2 to 3 countries per year, that just shows you the power of what we're doing. And when you think about the impact of this, not only are you able to give access to finance for the people who need it the most, as we've seen this year with the pandemic, but you're also able to do it at the right price. Because a big issue that tends to happen a lot of times is because of the unknown, where we're not comfortable lending to SMEs a particular amount in particular countries. That unknown results in a higher price. So which might mean you have to give collateral, land or cash or machinery, or we'll just charge you so high that there's no chance of us losing money. But of course, that makes it hard for the SME to thrive and make money on your money. So this is going to break down so many barriers, because you democratize finance and then you also get that finance to people at the right price, and you reduce overall costs for everyone. So that's what we're doing, and we're very excited to talk about it today.
Fabulous. Thank you so much indeed. It's a very, very exciting story, and all 3 possibilities. What strikes me is that each one of you, your organizations are raising the bar around what's possible. And it couldn't be possible without the power of AI. Terence, what do you think?
It's fascinating, because like what we are seeing here is 3 completely different businesses, how actually AI can put into use in 3 different, 3 completely different ways, from compliance to checking portfolios, portfolio cube, to servicing the underbanked or unbanked. My question, I would like to start with a question, so hopefully, we'll be able to get the conversation going, is this. It's all well and good to talk about, using technologies and to serve and come up with new propositions. What about from the customer's end? How receptive are they, to the offerings you are providing? So, Tunde, I think in your case, it is rather clear that, you have got a lot of people who are unserved, your companies unserved or underserved. Now they can actually tap credits. So, I would like to ask you, Tunde, what is the growth path? And for Jane and Suzanne, what are you guys seeing? What are you 2 seeing when it comes to people, whether your clients are ready to go, or they still actually have their own, they're still suspicious of technologies, because this is, crossing that gap, it seems to be it takes a lot of courage and money, of course. So what's the how receptive are they? Tunde, I'll start with you.
Sure, thanks for the question, Terence. So we've seen a very high receptivity. So just to give you some statistics, in the markets we care about, we look a lot at the African continent, and also we launched in Eastern Europe. The SME credit gap is close to $4 trillion, right? Wow. So this is just purely SME credit, not any other credit, just purely SME credit. So that says to you that there's a lot of SMEs who are clamoring for capital. And so they're very open to new ways of being served, because I think what we're going through now with this global pandemic is just accelerating trends that we all saw. So literally with Lidya, you do not have to leave your house or your office to apply for a facility. You can go from assessment to capital in your account within 1 day. And we're seeing that the traditional ways of getting credit, going into a physical bank branch, filling a bunch of forms, waiting 6 to 8 weeks for a maybe, is just not working for most of these customers. And so once they understand the strength of our product, they are willing to give it a try, because it's just 10 times better than the alternative. Now, that being said, we also always look to introduce empathy into our process. What I mean by that is we also fully acknowledge that not all of our customers, or rather a large amount of our customers, are taking credit for the first time. And so if we are tempted to say, look, just purely apply online, there's still a trust deficit, even if we're giving you capital. So we do also offer the opportunity to talk to somebody who can explain to you the benefits of taking credit, the impact on your credit score, what information you need to have. And then what we then see is that by the 2nd or 3rd time you take a facility, then you are fully digital. So we've seen very high receptivity, and that has translated into close to a 95% repeat rate, which means for us, if you take a facility, you're more than likely to come back and take a second, a third one, because you now see the benefits for your business.
Fantastic. Thank you very much. Suzanne, what is your view? How receptive are your clients? They are supposed to be more, they're very well versed in their expertise, but when it comes to the technology barrier, are they overcoming? Are they crossing it?
Well, leave it to you to pack 6 questions into one. Right? All right. So let's go in reverse, right? Let's start where we live. And if we order up an Uber, what do we see? We see a very modern interface, and the car arrives. Now, your portfolio, not so much, right? On the other hand, banks face, as you rightly said, the path forward to digitization. Does every bank need to digitize? Of course. Does every bank know that they need to digitize? Of course. And let's take it from the side of Microsoft. Microsoft believes that across the space, every portfolio, whether it's from a bank, insurance company, or brokerage firm, this is legacy technology. You don't have an Uber-like experience, and this is your money after all. Do we need some improvement, some risk mitigation connected to our money? Some people feel that we do, right? Others take the point of view, banks need to be disintermediated. We don't need banks. Let's just destroy, burn down every bank and start over. We don't think that makes much sense, and neither does Microsoft. So we're trying to help banks jump forward and digitize, but take the lift off of them. It's a difficult challenge to digitize, especially, as you said, in a regulated environment. So with Microsoft, banks can just AI enable. They can snap the AI on top of those portfolios literally in a day. There's no integration. So this is where we're trying to bring a benefit, really with the purpose that the end user, the retail customer, generally doesn't know what to do. They don't know what they own. They don't know what to do. They don't know where they're at risk. And the key word there is transparency. So the goal is to create the analytics, create the transparency, and then make it a fun experience with the cubes. And hopefully that's what we're doing, but we're getting a lot of interest. It's obviously very new, right? And it's obvious to people that they need a more modern solution, a more modern interface, and that's been a lot of fun. And integrating the ESG, it's a personal passion of mine. So many people want that solved. And how can we help? So it's really the two sides and bringing both of those together where we're trying to be helpful. And we're having a lot of fun with it. So I love the question. I hope I answered at least 3 of those 6, but
and doing good at the same time, which is wonderful. Marvelous. Thank you. Jane, what about you? What surely, everyone is clamoring for compliance, help in compliance, right? Reduce costs. This is especially when now documents must be piling up physically, in so many banks.
Terence, you're right that they should be, but before I came into this session, I actually jotted down on a piece of paper some of the barriers, shall we say. Banks are not natural embracers of new technology. I think it's fair to say. They are conservative entities. They are worried. They're very heavily regulated. They're worried about what the regulator will think of them experimenting with a relatively, in their eyes, small technology company. So I would say, I got into this business because I would like to make a difference and stop some financial crime. And coming from that perspective, what we do in my company is very laudable. But the banks have long resented their role in trying to stop financial crime and the amount of money they need to spend doing it. They feel as though they should be given more help, and that there's a role for law enforcement and the regulator, which obviously there is. And I guess I would say that people have made the comment before now, not only have we got legacy systems within banks, but we've also got a degree of legacy thinking. So in many ways there are a lot of barriers to the adoption of a technology, particularly AI, because it's new, it's not necessarily well understood. I guess the previous session where they were talking about the ethics of using AI in all sorts of different, autonomous cars, all those kinds of things, it's pretty obvious that if your sole goal and my company's goal is, you know, to make a difference to stop financial crime, then you're almost looking from the banks at a distressed purchase, because their costs are going up so much that they want to reduce those costs. And if they can reduce those costs and be compliant, then they will be happy to buy the product. Unfortunately, none of the regulators around the world, perhaps with the exception of Singapore, have been very quick to endorse regtech companies, which is how we're categorized, not fintech. And I would say that you know, although if a regulator says, oh, we like all those regtech companies, I mean, that's not terribly helpful, I've got to say. If you can't get down into the detail of what the company does and how it makes a success of what it does and how it saves you costs, then the banks are not interested. We found that we go down a storm with the senior management. They think this is great. Fantastic. But we do find that sometimes the barriers exist within the compliance department, because they might lose staff. They may, well, they will lose staff. You know, so I would say, whilst it's a sound product from a moral point of view, it's not necessarily easy to sell. Okay.
I mean, it sounds like, right, it's not an easy sell. It's things like it sounds like things have to happen at certain point. Are we reaching the point of inflection though? Like, are we reaching, you know, like, are the AI opportunities in your respective area? I mean, like a Tunde, it's a you know, it's clear, there is a clear case. But for Suzanne and Jay, you know, are the opportunities, how far are you, like, how far are we from seeing that, you know, companies will actually turn around and say, you know what, gosh, you know, it is really about time to get into, you know, to really like take a good look at the technologies and what we can do with them. You know, what's your feeling like right now, you know, just to give an idea?
Suzanne, if you don't mind, I was going to say we were helped quite well, ironically, quite a bit by COVID, because obviously people banks suddenly have to remotely onboard. There were some statements from FATF and the FCA about, in the UK, FATF globally, on how you can remotely onboard safely, and encouraging banks to say that just because you're not face-to-face doesn't mean to say it's less secure. Actually, it could be more secure, particularly if you adopt the right technology. So I would say that we're the inflection point. We're getting there now. There's still a reluctance because people don't necessarily understand the value of AI in their business. But we're breaking through in a number of significant ways. We recently participated in a mini hackathon with the Cabinet Office, because the other thing that's interesting is that a lot of public money is being handed out in this time, and the due diligence that the public sector does obviously has become, there's a spotlight on that now. So the whole process of due diligence on not only the people who are receiving the money, but the people who are the middle people who are perhaps in a certain trade or profession, they are looking more closely to do due diligence. We live in a different time. COVID has actually accelerated a lot of digital transformation, I would say. Good. I mean, like budgetary, I think it's like a budget is another issue, like especially now. But let's Suzanne, like how far are you, like you know, from the, you know, like from what do you see, like it's the, you know, like when people started to really actually dip into the technologies you like you know, you're providing, especially with AI, you know, like you were saying, it is scary stuff.
Oh, come on. That is not scary.
But
I'm not scared. Are you scared? No one's scared.
You tell him that. He's not scared.
Yeah. I'm scared. Yeah, I'm scared of anything. Everything.
You're scared. Nobody's scared. So really, Jane, I'm just building on Jane's comments, which she's spot on. But I would add, you're really asking a question about people, right? people who want to change, and we have a list over here, and then people that don't want to change for their own reasons. There's a list over there. It's Santa Claus. We're going to use two lists, right? Now, I'll quote, we have a marvelous friend, board advisor, James Staten. He's a Forrester executive now. He was the Microsoft Cloud strategist years ago. He says it better than I can. I'll just share his remarks. Do we have leaders? Do we have fast followers? Do we have followers? Do we have laggards? And more importantly, what happens to all those people, right? So you're talking about competitive business. You're talking about, I started by saying AI is a way to win. If people don't want to win, maybe you can't help them, right? Not everybody's going to win the Olympics, and not everybody's going to win in their business, but people that ignore technology, I mean, the track record is not there for people to win by ignoring technology. So maybe you can help everyone, maybe you can't, but you can't help people that don't want technology. You can't help people that don't want to transform, people that don't want to go on the cloud. And in our case, if they don't want to go on the cloud, we won't take the business. I mean, they have to be, it's table stakes. If you want to digitize, we can help you. If not, we'll read about you in the news down the road. I mean, is it that simple? James believes it is. I think obviously there's nuance there, but as James said, we're in a new era and there's new pressures, and finance as a sector is in decline. Pressures are on fees, interest rates, and range bound zero interest rates take away income and growth that would otherwise be there. Regulatory costs are increasing. So there's a need for automation. There's a need for rationalization. There's a need to improve, and technology is a path to that. So some will, some won't. And that's really in their hands.
I guess, in the case of Tunde, right, here, his customers are, clearly they are the one who are willing to actually give a technology a try. And I mean, the fact that you actually combine empathy with technologies make it easier for people to take over. Question, Tunde, for your, we all know that, your business is growing, your a number of list of customers are growing. Where do you see are the next area of development, beyond credit, offering SMEs credits, right? I mean, probably geographical or by product. What are the growth area in your business?
Yeah. So for us, our intent is to be the primary finance partner for SMEs in our chosen markets. And so that means we're going to look to do more than just credit. We led with credit very deliberately because, we are giving you our trust. We're giving you money. So that means the likelihood of a customer being willing to try us out is higher than saying, look, me trying to convince you to take a deposit from a Wells Fargo or Bank of America or Chase and give it to me. Now, what we're doing is building tools to help our SMEs get better and to digitize. So we have a free invoicing product where you can invoice all your customers for free. You can track your receivables. You can get more insights into your business. And the whole idea is to continue to tack on more of these products that allow you to understand how am I growing, what's driving my growth, and how can I fund the next phase of growth, that's for sure. And then also to the point that Suzanne just made, I mean, I think we're all in a race for market share because things are changing so quickly and the customer is not waiting. Because if you think about it, if you said who is the bank of today or to the future, I'm not sure. It could come from the social media platforms, it could come from traditional banks, it could come from fintech. The lines are getting blurred so much just given the amount of data that's being shared on these different platforms, Amazon, etc. So we all don't have the choice. You have to innovate and offer what the customer wants now. Yep. And for us, we've chosen to first focus on geographic expansion. So to say, look, let's go plant our flag in the biggest economies in the markets we care about. So Nigeria, Poland, and from there, we'll now start looking to do more products for sure.
Fantastic, fantastic. Right, I think we've got two questions coming from the audience. So one for, I don't know whether Susanna or Jane, you can actually see them. If not, then I will read out the questions to you. Will it be? it's up to you. I guess, I think I need to actually read the question because I don't think the audience actually can see it. So I think so I will start with the question for Suzanne. So basically, this question comes from Steve Hill.
This is from my lovely friend Steve. Hi Steve, very nice to have you here. Thanks so much for joining. Steve himself has run a couple of tech unicorns in his time, so brilliant to have you with us.
Wow, good, great, thank you. So Steve, so coming from Steve, the question is about the quality of the ESG data being accessed, assessed for reporting and analysis. For example, even rating agencies admit their analysts make up answers based on their opinions, where data is missing. The issue seems to critical to him, and both in accuracy and acceptability of the analysis. Will it be solved, or will we instead trust the answers just because they are provided by an AI? That's the question, Suzanne.
Thank you, Steve. And let me say, you were so right. So we're here at MIT, and MIT is absolutely fed up on this topic. And they just wrote a study about the nonsensical incomparability of ESG in general. Now, I will say that's the challenge, right? We know there's a need. We know the space has problems. We know the space is still in a frontier. Now, we also know it's a Tower of Babel. It's an alphabet soup. You've got one company over here, one over there, two completely different answers. Portfolio managers are stuck in the middle. And I was very much appreciative. Yesterday, I actually sat in on a presentation by UBS, and they have extreme expertise on this topic. And obviously, hundreds of people are working to discern the proper metrics and to cut down on the noise. The data is very noisy. Now, finance people are generally enamored with, let's say, qualitative data. Now, by definition, some of the ESG data is not qualitative in any way. It's very much a judgment call in some areas. Now, that's the reason this needs to be fixed, because it can't be ignored. We know there's problems. We know there's climate problems in particular. We've got to make progress. And really, the data needs to grow up. It's a data problem at the heart. And that's where we're trying to help with some of our technology, is to bring some sense into this chaos so that it's much more clear. Yeah. Do we have a confidence interval that this data might actually be correct? Or is it absolutely apparent that this data is just dead wrong? And we see all of that in this space. So there's data providers, there's a wide range of opinion. But on the other hand, asset owners, as UBS said yesterday, are out of patience with this sloppy data. They want this fixed. They want these answers. They deserve these answers. And hopefully technology will make this easier and better. And of course, there's many incentives, greenwashing being a prime one, but the rules are clear. The EU is now mandating that ESG in a proper form be taken into account at the fund level. Most asset managers simply throw up their hands. They don't know how to do that because of the point you made, Steve. So I do believe that improvement is coming. And you might know the big four accounting firms have gotten involved, and they are now insisting that 22 standardized metrics be applied across the space. That will bring a lot of benefit, a lot of improvement. Now, it's not going to be next year. It'll be a 2 or 3 year glide path toward that, but I do think you're going to see improvement. And obviously there's tremendous demand. People are insisting that these answers be made available.
Fantastic.
And ESG, again, very close to my heart as well. We've got one more question. We've got 5 minutes. So Jane, this is a rapid fire question for you. I don't know if you had a chance to read it while we've been chatting.
Yes, I have.
Scott Burling, Heathcote. Thank you, Scott, for your question. Jane.
Yeah, this is the point about fraudsters using lots of both new and old techniques, particularly at this time during COVID. And the answer is, you know, at some point we do have to fight fire with fire, as it were, because you have to bring to bear some technology to do, as Suzanne used the term earlier, and I like the term heavy lifting, because we are in a situation where serious and organized crime will exploit any gaps which exist in your processes, both your onboarding processes and your ongoing monitoring processes. And we've really got to show that technology can be successfully used, which I am confident about, in order to defeat those criminal gangs, because there are patterns that a human being wouldn't notice in the data. The way in which we use AI and machine learning in a number of different ways. When we're searching the internet, we search 96% of the internet. We're not searching just the surface web, as I mentioned, and we're using a lot of keywords to uncover information. We are not necessarily making, what we do is to rank the way in which that data is shown, so that if you have a very credible and very reliable source of data, we will pick those out first. I think the point that Suzanne's making, and I'd like to make, is that, you know, if people engage with software providers, they are inevitably going to increase the value and the efficacy of the software. I don't know of anybody who came out with a software product who could say on day one, it does everything. It's an iterative process, and I look forward. I should be talking to Suzanne about a partnership, because, you know, one day you will wake up and you will be talking to Alexa and asking Alexa for the details on X, Y, and Z company, and she will be able to access Suzanne's data. She'll be able to tell you, all that information. Similarly, you can talk to Alexa, you'll be able to talk to a chatbot to determine whether you should be onboarding somebody or not, because she will have done a lot of the work. What we can't do is we can't force these things. We can only demonstrate their ability, and we've got to allow the market to come along and catch up. And that's the process that we're seeing now.
Brilliant.
Fabulous. Thank you so much. And I love that visionary forward thinking. Right. So wonderful. Emery and Adriana made me promise to wrap up 5 minutes early so they can get the next session in on time, which means we have 2 minutes left. So you've all touched on something which is very close to my heart, as you all know, and that's making a difference, positive impact on society. Suzanne with ESG. Could I ask you each for just a 30-second inspiring finishing note on how your technologies can make a difference and hopefully will make a difference to society and the planet? Suzanne.
Janet, I don't know where to start. We're just going to go day by day, and as people see that there's a better way, they'll join in. And people, I think this last few months in particular, the resilience of people is the inspiration. And let's put the tools in the hands of the people to help them help themselves, and we can all move forward to a safer time. And that's really what it's all about. But Janet, I just love you for having this event today. I can't tell you how much I've enjoyed it. And thank you, everyone. Thank you.
Thank you so much.
Thank you.
That's beautifully put. Beautifully put. Thank you. And thank you so much for being with us today. Tunde, how are you able to make a difference with these powerful technologies? How are you going to?
Yeah, so for us, we know every single dollar we push out is going to a small business and is directly helping to create a job and to impact the local community. So that excites us and inspires us every single day. And we know we're building a world where anyone, it doesn't matter your gender, your race, your location, as long as you deserve credit to grow, you will get it because of Lidya and because of the technology that we have. So that's what excites us.
That's very exciting. I find this whole conversation so inspiring as well. Thank you so much for your time with us today, Tunde. Jane, you're always making a difference, but give us your closing thought, please.
Thank you. I think financial crime is a term that people seem to forget. That's covering modern slavery, wildlife trafficking, drug use, drug peddling. It's all sorts of crimes that are used to create cash for criminals, and that money is then laundered through the financial system. What we're all trying to, and I can't tell you how much money that is. There are only estimates, but they are vast. and so are the estimates about how much damage that does. So I think if we can make just some difference, some dents into that, we will have done society as a whole a lot of good.
Absolutely, absolutely, and with such powerful technologies and expertise and people, I know that's something that you will achieve. Terence, closing note in 15 seconds.
I don't
not
even
late
know
for
what to
me.
say. I mean, like all of a sudden, I feel like there is hope. With around.
Yes.
All of a sudden, I feel a lot more uplifted because I start to actually see the power of technologies. How can really actually do good in different aspects. From ESG to helping companies, that SMEs to a financial crime. It's not just financial crime; it's crime in general. This is this is thrill and thrill and spill. And I think technologies. This is the right way. Technologies should actually be deployed, and this is the right right direction in which all we should be pushing technologies into.
Right people, right technologies, right direction. It sounds like Buddhist, as it were. Right view, right meaning for our planet, right ethics, right values. And thank you so much to Emre and to Adriano and Philip Treleaven and the rest of the team at UCL, and Pete, I see, from Cisco, who I know is one of the sponsors. Thank you all very, very much indeed. It's been a massive, huge pleasure and privilege to speak with you all today, and I look forward to a brighter future as well. Thank you, Emre.